The year is 2025, and if you're paying attention, the echoes are getting louder. Markets are breaking records. Optimism is everywhere. Everyone believes the party will never end. But beneath the surface, something feels off. The same patterns, the same blind confidence, the same dangerous optimism that fueled the 1929 crash, they're happening again, right now. Most people see rising stock charts and think prosperity. But the smart money? They see warning lights flashing red. They see 1929 all over again. So today we're pulling back the curtain on what could be the next great financial collapse in American history. 100 years ago, America was unstoppable. The roaring 20s were booming. Jazz, new money, fast cars, and faster dreams. The stock market had exploded upward for nearly a decade. Everyone, from factory workers to millionaires, was investing. People borrowed money just to buy more stocks, convinced they'd never fall. It was the first age of mass speculation, and the newspapers fed the frenzy with headlines like, "A new economy is here." Sound familiar? Fast forward to today. The technology has changed, but the mindset hasn't. We're living through our own roaring 20s. The AI revolution, electric vehicles, cryptocurrency, each promising to reshape the world. Investors talk like risk no longer exists, like the rules of economics have been rewritten. And just like 1929, optimism has blinded reason. Back then, they believed the party would never end. Today, we believe innovation makes us invincible. But history doesn't care about belief. When speculation replaces logic, the fall is inevitable. But that optimism was fueled by something even more dangerous: easy money. In the 1920s, credit flowed like water. The Federal Reserve kept interest rates low to encourage growth. Banks handed out loans to anyone with a pulse. People bought stocks on margin, paying 10% up front, borrowing 90%. As long as stocks kept climbing, everyone looked like a genius, until the first cracks appeared. When prices started falling, those same investors got margin calls. They had to sell fast, and the selling turned into panic. Now look at today. For over a decade, we lived in our own era of free money. Interest rates near zero. The Fed printed trillions. Governments spent like there was no tomorrow. Companies borrowed billions, not to innovate, but to buy back their own stock, inflating prices and executive bonuses. Venture capitalists threw mountains of cash at startups with no profits and no plan, only a promise. Crypto tokens with animal logos reached billion-dollar valuations overnight, but none of it was sustainable. And now, as interest rates rise, the illusion is fading. Corporate debt is at record highs. Government debt has blown past $34 trillion. Consumer debt, over $17 trillion, the most in history. We've built an economy addicted to cheap credit. When that credit dries up, the whole structure starts to shake, just like it did in 1929. In 1929, the top 1% of Americans controlled about 23% of the nation's wealth. People saw it as a badge of success, proof that capitalism worked. But when the crash came, that concentration turned deadly. When the rich stop spending and the poor have nothing left to spend, the entire system stalls. Fast forward a century, and the concentration is even worse. Today, that top 1% controls over 32% of U.S. wealth. That means, for every dollar created, the vast majority goes to a tiny fraction of people. The result? The middle class, the backbone of real economic growth, is disappearing. Wages can't keep up with inflation. Rent and food prices soar while savings shrink. Young Americans are buried in student loans before they even start their lives. Meanwhile, asset prices keep inflating because the ultra-rich keep buying. Real estate, stocks, collectibles, even farmland. It's the same cycle of illusion. The top keeps winning, the bottom keeps borrowing, and everyone believes the good times will roll on forever. But as 1929 proved, nothing grows forever. When wealth gets trapped at the top, the foundation below it starts to crack. And when it cracks, it collapses. In 1928, one stock symbolized the madness: RCA, the Radio Corporation of America. Radio was the hot new technology of the time, promising to revolutionize communication forever. Investors called it the future. Sound familiar? RCA's stock soared to 500 times earnings, an absurd valuation even by today's standards. When the crash came, the company lost 97% of its value. Now fast forward to 2025. We're living through the same movie, just with new characters. Replace radio with artificial intelligence. Replace telegraph tycoons with tech billionaires. Replace margin loans with venture capital hype. AI startups worth hundreds of billions with no real profits. Electric vehicle brands valued higher than companies that have built cars for a century. Crypto coins popping in and out of existence overnight. Every generation has its "this time is different" moment. In the 1920s, It was radio and airplanes. In the 1990s, the internet. In the 2020s, it's AI and digital gold. But no matter how shiny the new technology, the psychology is always the same. Greed, hype, blind faith, collapse. And when speculation replaces fundamentals, the fall isn't just possible. It's guaranteed. But hype isn't the only danger. The real problem is how fragile the entire system beneath it has become. Let's look at the data, not the headlines, but the facts. Commercial real estate values are plummeting as remote work leaves office towers empty. Regional banks are holding billions in unrealized losses they can't acknowledge. Tech companies are laying off thousands while claiming record earnings. The wealth gap is at record levels, and consumer confidence is sliding. Yet the mainstream media keeps saying, "Don't worry, it's a soft landing." That was the same phrase used in 1928. In October 1929, everything looked normal until it wasn't. Investors woke up one morning to see their wealth vanish in a single day, and the world has never been the same since. We're seeing the same pattern now, record highs followed by quiet warnings, political leaders downplaying risk, financial gurus calling skeptics doom mongers, and ordinary people ignoring the flashing red lights because they don't want to miss out. History teaches us one cruel lesson. When everyone feels safe, that's when you should be most afraid, because the moment confidence breaks, everything goes down together. The Great Depression wasn't just about lost jobs or falling stock prices, it was about broken trust. But even then, Americans still believed in their institutions. They trusted their banks, their government, their communities. Fast forward to 2025, that trust is gone. Confidence in government is at record lows. Media credibility has collapsed. People believe the system is rigged, and they're not wrong. Corporate bailouts while small businesses go under. Rules bent for the powerful, enforced on everyone else. When the next crash comes, the outrage will be different this time, because it won't just be about money, it'll be personal. The middle class is already stretched to the breaking point. If their savings vanish, their homes lose value, and their jobs disappear again, the anger will explode. We've already seen glimpses of it. Protests, polarization, people turning against each other instead of the system that failed them. Now imagine that, multiplied by millions who suddenly realized the recovery was built on lies. That's not just an economic crisis. That's a legitimacy crisis, the kind that topples empires. And when people lose faith in everything, money, media, leadership, chaos fills the vacuum. But the scariest part isn't what happens during the crash. It's what comes after, when the curtain finally falls and everyone sees what was really going on. Picture this. The market dips one morning, just a few percentage points. Traders shrug it off. Healthy correction, they say. But within hours, it spreads. Algorithmic trades kick in. Billions are dumped automatically. The drop triggers margin calls, forcing investors to sell. Panic starts to ripple through every market. Stocks, bonds, crypto, even real estate funds. Within days, the global financial system begins to freeze. The talking heads on TV call for calm. Politicians promise temporary volatility. But behind the scenes, liquidity is evaporating. Banks quietly restrict withdrawals. Funds suspend redemptions. Retail investors watch their accounts melt, helpless. And just like 1929, it all unravels. Not over months, but days. The difference? This time, everything is connected. A crisis in New York triggers panic in London, which crashes Tokyo, which freezes Hong Kong. The same algorithms that once made markets efficient now accelerate the downfall. The public will demand answers, but by then, it'll be too late. Governments will scramble to print more money, but that only destroys trust in the currency itself. People will rush to hard assets, gold, land, even crypto. But the panic will move faster than anyone can react, and when the dust finally settles, the illusion will be gone. The idea that central banks can prevent crashes? Destroyed. The belief that technology made us invincible? Gone. And the assumption that it can't happen again? Proven catastrophically wrong. Because history doesn't repeat word for word, but it rhymes loud enough to shake the world. Now, before you start thinking this is just another doomsday story, it's not. Crashes are painful, yes, but they also reset the system. They clear out the corruption, expose the fake prosperity, and remind everyone what real value looks like. The key isn't to panic, it's to prepare. Start with the basics. Cut unnecessary debt. If you don't own it, you don't control it. Next, keep liquidity. Cash on hand, emergency savings, flexibility. When everyone else is forced to sell, those who can buy survive the storm. Third, diversify. not just in stocks or crypto, but in real assets, land, skills, knowledge. Because in every collapse, those three things hold their value better than any number on a screen. And finally, study history. Not just the charts or the numbers, but the human behavior behind them. Because the truth is, the economy doesn't run on dollars or data. It runs on belief. And when belief breaks, everything else follows. History teaches us the same lesson again and again. You don't have to predict the crash to survive it. You just have to stop believing that it can't happen. Because while most people are chasing hype and headlines, the few who understand history are quietly preparing. We believe artificial intelligence will save us. We believe central banks can control the storm. We believe that history has somehow stopped repeating. But the truth? History doesn't care what we believe. It punishes arrogance. It humbles greed. And it always collects its debt with interest. If this opened your eyes, don't forget to like and subscribe.